Hey guys, how's it going? Sean back here with Everything REI. And today we're gonna do a little experiment. We're gonna figure out if investing in the Bay Area makes sense. Coming right up. So hey guys, how's it going? My name is Sean and I'm a real estate professional here in the Bay Area. And on this channel, we go over real estate investing tips, strategies, and current events to help you learn more about the business and to help you become a real estate investing boss. Recently, I had a very interesting guest on my podcast, and one of her main investing strategies is to actually buy apartment buildings here in the Bay Area. Traditionally, investing in multifamily apartment buildings in the Bay Area didn't make sense because you're not getting the amount of cash flow that you would get if you invested in places out of state, like in Alabama or in Florida. There are many gurus out there who have big syndications who say that you need to have about a 10% cash on cash return, or maybe an 18% IRR. And what they're doing is they're pooling a lot of money, they're buying an asset, they're renovating it, and they're getting the cash flow and distributing out money through preferred returns. Well, my investor friend's strategy is a little bit different. She's doing the same thing, except she's buying it in the Bay Area, where you have to deal with rent control, paying $50,000 for cash for keys. But somehow she's able to make it work and able to make hundreds of thousands of dollars per project. So today we're gonna dive in and do an example and see if this method truly works or not. So follow me, let's hop right in. Okay, so the first thing that we're gonna do is we're gonna go on loopnet.com. If you guys don't know what LoopNet is, it's basically the Zillow for commercial real estate. So if you wanna buy apartments, you don't go on Zillow, you go on LoopNet. And of course, as I say, LoopNet is where all good commercial deals go to die, because in the commercial space, most of the transactions are done as a pocket listing. So that means that a broker will find the buyer and they don't actually have an MLS. Everything's kind of done off market. And if they can't sell off market, then you go to LoopNet. So this building is 41 Moss Avenue. It's in Oakland, 15-unit apartment building, $3.75 million at a 3.1 cap rate. Generally, apartment syndicators want to see at least an 8% cap rate. And the cap rate means the net operating income divided by your purchase price. So here, we're only getting a 3.1% cap rate. So that means that we're not getting a lot of money. Maybe profiting about $100,000 or so a year. It's not really that worth it, but we'll see if we can make this worth it. So we'll write down some numbers here. 15-unit apartment building at $3.75 million. So I have this random spreadsheet I just made. We have purchase price, loan amount, down payments, etc. So here our purchase price, let's say it's $3.75 million. She was actually able to acquire these properties using a hard money loan. Otherwise, you have to go through a commercial route, and there are some more requirements there, including getting someone with a high net worth that can fulfill this loan. So basically, if you were to get a regular commercial loan, you need to get some high net worth individual who has over $3.75 million in assets in order to get this loan in the first place. And they also need to have multifamily experience. So that's why you have a big team for these syndications. But the hard money loan, generally, as long as you have the down payment and the deal makes sense, you can get funded. Right now, hard money loans are also kind of in flux because of the COVID pandemic. So let's just say that they're going to get an 80% loan to value ratio loan. So your loan is going to be 80% of this number. Your down payment is going to be your purchase price minus your loan amount. So right now, if we look at the actual property itself, we can see some general information on LoopNet, but they also had something called an OM. So an OM is an offering memorandum, which basically tells you more information about the property. So it shows you like the proximity to everything. It gives you more details on the numbers, and you can even see how much money they're getting. So right now they have 15 units, and the average rent for unrenovated units is about $1,000, and the average for renovated units is $2,000. So we're seeing a $1,000 premium for renovating these units. So there is a potential for a lot of return and gain in the near future. So we can see here that they have 13 one-bedroom, one-bathrooms and 2 one-bedrooms, one-bathrooms with a den. So what we're going to do is we're going to just compare numbers here. We're going to look at what they have now. Let's just say they're making about $1,000 per unit times 15. And if we went in and renovated all the units, we would actually get 15 times 2,000. So they'll be making $30,000 in gross rents every single month. Let's make this into year so that we know how much money they're making per year. Okay, so you're getting about $360K gross per year. Expenses, generally they say 50%, but maybe in California, because the rents are higher, maybe your expenses are going to be around 40%. So let's just use that for now. So 0.4 times your gross rents. And see, this also doesn't really make sense, right? Because you're going to double your rent, but does it mean you double your expenses? Maybe not. But for now, we'll just continue using this rule of thumb, and we can make some adjustments later. So your NOI is going to be your gross minus your expenses. So here, that's about right, $108,000. And let's just look at what the cap rate is for here. So if your NOI is $108,000 and your purchase price is $375,000, then you're getting about a 2.8% cap rate. So maybe they're making a little bit more, maybe their rents are higher or their expenses are a bit lower. And if you were to do it after renovating, let's see what it is after renovating. Now it becomes a 5.7 cap. So as you can see here, by renovating all the units, you can increase your cap rate. So how much does it cost to actually rehab this property? If you were to rehab a single family home, it would cost about $70,000 for a small single family. Apartment buildings are a lot smaller and you don't have to do as much structural work. It's just basically paint, carpet. And if you want to, you can actually increase the size. You can change the floor plan. That's what my friend does. Since these apartments are only 1-1s, I don't know if there's that much room per bedroom. But basically, it doesn't seem like it's going to be easy to convert these into like a 2-bedroom, 1-bath. If that was the case, it would totally be worth it to spend the extra money to do that renovation. And that would obviously cost more money and take more time, but you can get significantly more rents for that. So for example, in Oakland, a 1-bedroom, 1-bath can rent for $2,000 a month, but a 2-bedroom, 1-bath can probably rent for $2,500 a month. And we're going to see here just how much those extra $100 per month will actually go towards your bottom line. So let's continue our calculations here. If we were to make a healthy estimate for rehab in Oakland, for these small units, I can't see it going more than $40,000 per unit. So let's just assume we have to do an entire rehab of the entire structure. Let's say $40,000 times 15. So it's going to cost you $600,000 to do this. And what about cash for keys? In Oakland, Berkeley, and San Francisco, the average for cash for keys is around $50,000 as well. Sometimes you can get away with paying just $10,000. Sometimes they move away on their own. Sometimes you have that one person who's just holding out for a big paycheck and you have to give them $150,000 to move. Let's just be conservative and let's just say that our cash for keys is going to be $50,000 per person as well. And that's a lot. If you ever heard my story about my Jacksonville squatter, we paid her $300 to leave. $50,000 is a lot of money. And let's assume that we have to pay $50,000 for every single tenant. Of course, in real life, you don't have to worry about paying every single tenant because, again, some people move out, some people just don't want to move, and you're stuck with what you have. So property value at a 4 cap is going to be equal to your NOI divided by 0.04. So as you can see here, the property value is actually $1 million less than your purchase price if you were to buy it today at a 4 cap. And let's see what if it was here. But if you increase the rents at a 4 cap, it's going to be worth $5.4 million. So even though you are buying this property a little bit more expensive, if you do the work, you create almost a $3 million spread. So let's calculate the loan amount. So your loan amount is going to be your loan for the acquisition. And then you're also going to get a construction loan for the rehab. And then some hard money lenders actually will finance your cash for keys. But it's similar to a construction loan where they don't just give you the money to then give to the tenant. What they do is they set up an escrow account for you. So whenever your documentation with the tenant is done and they move out, then they'll wire the funds directly to the tenant. So you never actually touch anything. So let's say your total loan amount is going to be $4.35 million. That hurts my heart, but that's a very big loan. If you consider origination fees to be about 1%, so you're paying $43,000 in origination fees, and your hard money costs are going to be 9%. For a project like this, where you're slowly transitioning your tenant base and you're remodeling each unit at a time, this project can take a long time. It can take a year, it can take a year and a half, depends on what you're doing. So let's be ultra conservative and let's say this project takes a year and a half. So we take this loan amount, you multiply it by your interest rate, which is 9%, and and then you're going to multiply it by 1.5 years. So 18 out of 12 months. So 1.5. So your interest is going to be almost $600,000 as well. So your total money in is going to be your down payment plus your origination fees plus the hard money costs over the 1.5 year time frame. So you basically need to have $1.38 million to do this project. Let's calculate what the total profit's going to be. Let's say you sell at a 4 cap, which is actually conservative considering they're selling to you for a 3.1 cap. Let's say it's a 4 cap at $5.4 million. Well, when you sell it, you have to subtract broker's fees as well as miscellaneous closing costs. So it's going to be about 7%. 5% for the brokers and 2% for the miscellaneous closing costs. So what we're going to do is multiply this number by 0.93, which is 7% less than 100%. Then we're going to subtract our total loan amount. And we're also going to subtract the money that we put in. So it seems like by doing this deal as is, we're going to lose $700,000. And that does not seem very good. So from just looking at these numbers as is, it seems like this is not a very good deal. But what are some of the tweaks that we can do to make this a good deal? Well, for one, this purchase price of $3.75 million seems like a lot, considering that properties in Oakland maybe go for 4 cap, 5 cap. I don't think a 3.1 cap is justifiable, especially in as-is condition. So maybe we can negotiate this down a little bit more. Let's just say that we're buying it at a 3.5 cap, okay? So a 3.5 cap would make this property $3 million. So we're asking $750,000 off of the purchase price. That's gonna be very tough. And again, I don't know the full net operating income. This is just an estimate as well. So if we just copy this number and paste it here, all these numbers change. And we can see here that now we're actually making some profit, but not too much, only $32,000. What else can we potentially change here to make this deal make more sense? So the rents here, it's about it, right? This is as much as you're gonna get in this current market. If we were to do more renovations and we were able to expand it, just for hypothetical sake, what happens if we change these to $2,500 a month? So increase it a lot. And then we increase our rehab budget to $60,000 per unit. Okay. See, this is why it makes more sense. If we were able to increase it by changing the layout, by adding an extra bedroom, by adding an extra bathroom, we can now increase the rents by $500 a month. And then now we're actually going to make profit. So it doesn't really make sense to just buy a property, rehab the interior, and then just rent it out. You need to do some significant changes on a potential property. So when you buy properties in the Bay Area, make sure that they have a large square footage and you're able to think about how you can rearrange the rooms and the bathrooms so that you can get more rent per month. Another thing that's really big is what if you sold it at 3% too? If you're able to sell it at 3 cap, my God, this building's not worth $9 million. And now you made $3 million in profit. This is the beauty, but also the risky part of investing here in the Bay Area. You don't really know all of these numbers. You can only predict before going in. I have to make a lot of assumptions here. I have to assume that I was able to do cash for keys for everybody, right? There might be some people who just don't want to move, and you can give them $100,000 and they still won't budge. So then you're stuck at low rents. But this does prove that cash for keys does make sense because we're spending $50,000 per unit, but we're able to get $1,000 a month in rent. And just as an example, let's see what the impact is. If I'm able to do $0 cash for keys, right? And my rent was $1,000 a month. Let's assume that I also had no rehab budget. So as is, obviously we lose a lot of money here, $95,000. But what if we do $50,000 cash for keys, okay? So we lose another $50,000, but our rent here goes up, let's see. But our rent here goes up by $1,000. What is the impact here? Wow, so we made profit. The difference here is significant, from minus $150,000 to positive $70,000. So that's $220,000 just from increasing the rents by $1,000 a month for one unit. So you can see here, it is very powerful and it's definitely worth doing. Well, I hope you guys enjoyed this video about going through the numbers and seeing if we can make buying in the Bay Area worth it. As we saw here, it is actually very complicated, and I think that's why people don't do it as often. But because people don't do it as often, because it's more risky, that gives more opportunity for savvy investors who know what they're doing to go in and make a huge profit. You can make millions of dollars by doing this the right way. From my example here, it seems that 1, don't be buying a property that is at a 3 cap. You probably want to get something at a 5 cap and then sell it at a 4 or 3 cap if you can. There's a lot of unknown variables as well, and that's where the risk is, and that's also where the profit is. So you could get lucky and have to pay nothing for cash for keys, or you can get unlucky and they're going to ask you for $1 million each for cash for keys. The rehab budget is not that hard to assume because you can get a general contractor to come in here and help you lay out the floor plan, and they can also give you an estimate of what's that going to cost. You're also going to be able to work with a property management team who can tell you what the expenses will be. So with apartments, if you can increase the rent and decrease the expenses, you're going to increase your net operating income. Then because you're in the Bay Area, you'll be able to sell this building at a relatively low cap rate. And this low cap rate is what makes cash for keys worth it. It's what makes all this rehab worth it. It's what makes rent control okay to deal with, because you're going to make so much more profit on the back end when you sell the asset. So I hope you thought this was very enlightening. If you enjoyed this video, please smash the like button, subscribe to the channel, and hit the bell notification to see more videos just like this one. And let me know your thoughts. Did this video change your mind, and will this make you more willing to invest here in the Bay Area? Let me know your thoughts down in the comment section below. And if you guys are interested in doing a project like this, and you guys need connections for a hard money lender, feel free to contact me. You can book a call with me with my link down in the description as well. Thanks for watching this video, guys, and I'll see you next time. Take care.